Before I begin to this video, let me give a quick disclaimer. I am not a financial advisor. The content of my videos represents my personal opinions and is provided for informational and entertainment purposes only. My information is not intended to be legal, financial, or an investment advice. Always conduct your own research and due diligence before making any financial decisions. Remember, it's your money. Please make informed decisions that are right for you. I'll never ask you for money, nor will I provide my phone number or personal email address. If you encounter any suspicious accounts or messages claiming to be me, please report them immediately as fake or scam accounts. Welcome back to Talk Stocks with me, where we turn market noise into clear signals, leveraging price action data and technical analysis. Just before we begin this week's video, I just want to remind you of how I get to decide whether we have a bullish trend, a bearish trend, or a neutral trend on the charts. I arrive at a bullish trend when the close price is greater than the 20 exponential moving average, the plus DMI is greater than the minus DMI, and the ADX is greater than 20. I also arrive at a bearish trend when the close price is less than the 20 exponential moving average and the plus DMI is great and the minus DMI is greater than the plus DMI, and when the ADX is greater than 20. When both of these measures hold but the ADX is greater than 25, then I even label it as a strong trend, which could either be bullish or bearish, and that's why you have this asterisk. When I'm not able to identify a bullish or bearish trend, then I give it a neutral trend. So let's begin this week's recap of the market performance with the US large cap stocks, which I track by the ETF VTWO. This week delivered negative 0.48%. Year to date, VTWO has delivered 16.47%, and you can also see that is lower than last year's overall performance of 24.98. In the short term, a neutral trend can be identified. A neutral trend can also be established from the weekly time frame. Moving on to the Nasdaq, monitored by the ETF QQQ, gave negative 0.021% this past week, bringing its year-to-date total to 20.70%, also slightly below last year's overall return. We still have 1 week left for the year to end, so we'll see if we'll be able to meet up with last year's performance. But the way it's looking, both the VTWO and Nasdaq are underperforming last year's total returns. In the short term, I'm able to identify a neutral trend when analyzing the daily time frame, and also in the midterm, I'm also observing a neutral trend after studying the weekly charts. Then we move to the small cap stocks, which I track by the ETF VTWO. This past week, it printed negative 1.51%. And year to date, VTWO has delivered 13.93. You can see clearly that the small caps as at this week have even outperformed the last year's overall total, showing that as the Fed has started to reduce interest rates, it has favored the small caps when you compare it to the large caps, which is VTWO and QQQ. In the short term, the neutral trend can be identified on the daily time frame, and in the midterm, a bullish trend can be observed from the weekly time frame. Canadian equities, evaluated by the ETF VCN, delivered positive 0.25% this past week, and year to date, VCN has delivered a return of 28.53%, also outperforming last year's return. And I would say this has been due to the bullish run of gold. Many of the Canadian markets has so many companies that are into metals, but precious metals, gold or silver, and that's what has favored the Canadian market. When we look at the Short term, I'm able to identify a strong bullish trend, and also in the midterm, a strong bullish trend can also be observed from the weekly chart. When we move to Nigerian equities, which are tracked by the NGX ASI, this past week returned 1.76%. Year to date, the index, which is ASI, has delivered a return of 47.73%, which is very impressive. When we compare it to last year's performance, you can see last year was 37.65. So the Nigerian market has really done well when you look at it year over year. In the short term, the daily chart points to a strong bullish trend, and in the midterm, the weekly chart is also pointing to a strong bullish trend. Furthermore, the oil commodity, which I value or which I track by the ETF USO, inked negative 0.67% this last week. Year to date, oil prices have delivered negative 9.95% compared to last year's overall gain of 13.35. You can see this year has not been the year for oil commodity. Well, some traders might have traded in the short term, but there has been no trend. You can see the performance of oil has been not so encouraging this year. In the short term, a neutral trend can be observed studying the daily chart, while in the midterm, the weekly chart is pointing to a neutral trend. Bitcoin, which I proxied by the ETF GBTC, posted negative 1.50% this week. Year to date, Bitcoin prices have delivered negative 7%. So Bitcoin has been down this year compared to last year's overall 113.81%. In the short term, the daily time frame exhibits a bearish trend. Additionally, in the midterm, the weekly chart points to a bearish trend. World equities, which I track by the ETF VT, gave negative 1.14% this last week. Year to date, VT has delivered 19.59%, also significantly outperforming last year's 16.49%. In the short term, a neutral trend can be identified studying the daily chart. Likewise, in the midterm, a neutral trend can be identified analyzing the weekly chart. Finally, gold commodity, evaluated by the ticker GLD, delivered 0.32% this past week. Year to date, GLD has delivered 64.80%, which is very impressive, especially when you also compare to last year's overall 26.66%. In the short term, a strong bullish trend can be identified analyzing the daily charts. In addition, in the midterm, a strong bullish trend can be observed studying the weekly chart. Let's get into the second chapter of this week's video, where we'll be doing a deep dive into the NGX ASI internals. Now, what is the internals? The internals of the market is basically me pulling the curtain, right, to see how the stocks within the Nigeria market are performing, right? This is beyond looking at the financial statement of company. No, it's just like you have a vehicle, a BMW, a Mercedes. Well, we know these are great cars, but now I want to open the hood to see how the system, right, that makes the car move, right, how it's performing. How is the injection system? How is the braking system? Basically, that's what I'm doing, the combustion system. So that's what I'm doing with the market internal. I'm pulling a hood of the market to see how healthy or rotten or smelling the market is. Now, to do that, I have some metrics that I track, and they are all data driven, right? They are variable. It's not like I conjured it up from space or from the moon. And these metrics, I'm able to arrive at the strength of the Nigerian stock market. How to read this report? You can either have strong rating, which means broad participation across sectors and stocks. It could be neutral, that means there's fair participation, or it could be weak, that means very narrow participation, and only few stocks are doing the heavy lifting. So let's begin with the market internals. Now, before I go into the specific metrics, the overall rating that I got based on this last week is advancing and healthy, and I gave it a yellow symbol, meaning fair participation. Why is it fair participation? That's what we're going to see in the next minutes within this video. Now, one of the first metrics that I use to evaluate the health of the market is the number of stocks trading above the 50-day moving average. Now, what I mean is that for each stock that comprise the basket, right? The basket comprises 143 stocks. Now, from each of them, how many of them are trading above their respective 50-day moving average? What is the 50-day moving average? 50-day moving average is basically the arithmetic mean of price of that stock within the last 50 days. It gives us an objective way to evaluate whether buyers or sellers are in charge. So, if a stock is trading above its 50-day moving day average, it means it's healthy, right? It means buyers are in charge, and that means the stock price has a higher probability to keep going up. Look, the whole realm of technical analysis is all probability. In fact, life is probability, right? That you can't be 100% certain of anything in life, right? You have a higher probability that this will happen. So this is telling, when you see stocks that trade above their 50-day moving average, it gives you a higher probability that the sale, right, that the tail is in favor of buyers. So now this week that just ended, you can see that there was a 9 percentage point change from 36% to 45%, which is very great. So if you can find these stocks, that belong to this basket, you will stand to be more profitable than others who just buy randomly. Also, the next measure that I look for is the number of stocks that are above the 200-day moving average. Now again, the 200-day moving average is just basically an arithmetic mean of the price of that asset over the last 200 days, right? And this keeps changing when, as you add another day, this value keeps changing. And the trend, you can also look at that. Are the number of stocks trading above the 200-day moving average, are they increasing, are they decreasing? All this gives you insight into how the market is. Now, week over week, you can see it increased from 2 percentage points to 71% to 73%. 200-day moving averages stands has a last stand, right, for a stock. You don't want to be in a stock that is trading below its 200-day moving average. I also use the Weinstein stage classification in the market. So this tells me Weinstein is a he has a book, and from here he analyzes that a stock comprises of 4 stages. You have the advancing stage, which is stage 2, you have the topping, you have the declining, and you have stage 1, which is the accumulation stage. Now, advancing stage, which is stage 2, classifies stocks that are moving, right? They are moving. They are not moving up, not even moving down, moving up, meaning buyers are in charge. So again, when I look at the percentage of stocks that are advancing stage in the market, you can see it increased by 1 percentage point week over week, landing at 57%, which is great. Also, when you look at the stocks that are advancing, you are looking for the ones that are in a strong uptrend, right? You can also see that week over week it increased from 26% to 30%. That's 4 percentage points. So most of the rally we saw in the market, remember in my first chapter I said I think the ASI did 1.76. You can see it being reflected in the market internals. You can see it's all positive change this week. So this is why I tell you, beyond the glamour, beyond he did this, there is a market internals that can decipher the message of the tape to you. Now, when we look at the sectors that comprise the ASI, let's look at those, how they are performing. So the NGX ASI is advancing. You can see it's even in a strong advancing phase, similar to the NGX 30. So the NGX 30 is 30 of the most capitalized stocks in the market. And also the consumer goods is showing strong advancing, right? So which is very great. So as a trader, if you want to have probability on your side, to make money, you want to look for strong stocks in the consumer goods sector. That's how to trade with data, right? You want to know which sectors are strongly advancing. Once you know the sectors that are strongly advancing, you want to go and look for the strong stocks in those sectors that are strongly advancing. Now, the other sectors which are just either advancing or declining, I didn't make any separation among those. It's industrial, oil and gas, banking, and insurance. So again, as a long-term investor, you can see value here, but even as a long-term investor, I wouldn't want to take a position in a sector that is in declining phase, right? So again, thank you. I hope you found this section useful. If you have any questions and you want to understand these metrics more, please drop a comment in the comment section of this video, and I'll be sure to get back to you. Let's move on to wrap up this video by looking at the US market and to see where the opportunities there. In the next chapter of this week's video, we're going to look for opportunities together in the US market. Remember, we are approaching the tail end of the year, and we've typically heard of the Santa rally. So hoping that we're able to achieve that this year. And I think the whole idea about the Santa rally is because, you know, the hedge funds will be on holidays, and the market is predominantly traded by retail traders, and retail traders, a large percentage of them only know how to buy the dip and go long, right? So that's why there's a tendency for the market to always go up. So that's just, I just wanted to, you know, bring that out there with regards to the Santa rally. Now, as we look into trading this week, the first question that I always ask myself is what sectors are showing strong short-term momentum? Because I trade short-term the market, right? I invest long-term. So now, based on the short-term momentum, I'm able to identify that the technology sector is showing strong momentum. And you can also see that when you look at the month-to-date performance, which is the light shade of green. So this month, the technology sector has returned 2%. And in the last 3 months, it has returned 3.13%. Remember, the S&P 500 comprises of 11 sectors. But going into this week, this is the only sector that my system issued me a strong signal on to look for long opportunities. So there are two things. I can either go and trade this sector going into this week. And again, this just means that this week I want to focus on technology sector. It doesn't mean Monday I'm just going to go buy it. No, it just means this week I'm only going to focus on opportunities in the technology sector. I'm going to use technical analysis to time my entry, right? So there's also the timing piece of it, right? Also, I can look for the strongest stocks within the technology sector. And again, my system is showing me this one has my potential candidates. You see, there's Micron, there's WDC, there's EPAM, there's TER, there's LRCX, and my system is also showing me that this month, you know, what they have delivered. So you can see Micron this month has delivered 14.48. If you look at ON, 11.56. Palantir, that is 17.20. And this column here, the second column, is like their CGPA. So again, this is Talk Stocks with Me custom scoring metrics, and this is how I use to rank stocks as well as ETFs, right, against the S&P 500, right? Because the S&P 500 is my benchmark. I only want to look for sectors or stocks outperforming the benchmark, right? So that's the whole concept about it. So again, going into this week, I'm going to focus on these stocks here, right, and to trade those that meet my entry criteria. That's how I'm going to trade this week, using data as my superpower. No emotions, data. Now, it doesn't mean some other sectors might not rally this week. I mean, it's fine with me. I am a data-driven trader that wants to use only data as my superpower. I don't want to be pulled left and right and center. I want to have my list that I want to pay close attention to week over week. And sometimes there might be no sector that shows up here. So if no sector shows up here, it means that week I'm not going to trade long. I also have a similar sheet like this that shows me opportunities where I can go short, right? But again, it depends on what the overall market is doing. I go long when the overall market favors me going long, and I go short when the overall market favors me going short. Again, there's this famous saying, a floating tide, you know, floats all boats, right? I'm not sure if I got it right, but I'm sure you understand where I'm going, right? So if the tide is floating up, definitely I'll go long, and if the tide is against me, I will short in favor of the direction of the tide. So overall, global markets are in a selective environment, not a broad risk on phase. US large caps, Nasdaq, world stocks, and oil remain range bound, which means patience and precision matter more than prediction. The real strength right now is outside the crowded US growth trade, with Canadian and Nigerian equities showing clear short and mid-term bullish momentum, and gold continuing to act as a strong trend asset. On the flip side, Bitcoin remains under pressure, signaling that risk appetite is still constrained. In this type of market, the edge comes from trading what's working, avoiding what's not, and waiting for confirmation, not forcing trades. Stay aligned with strength, respect neutral conditions, and let momentum dictate exposure. Thanks for tuning in. If you found this helpful, drop a like, hit subscribe, and share your market view in the comments. I'll see you in the next one.